Welcome to Global Money Talk, brought to you by SamProTV. Greetings to your viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me on this Tuesday morning on the floor of the New York Stock Exchange for our market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, good morning to you.
Good morning, Remy.
Well, of course, as we woke up this morning, we heard about the latest from overseas, in particular the People's Bank of China, and their stimulus measures to shore up their markets and their economy. So what did you make of the headlines?
Absolutely. And I suppose you could call it a little bit of China's Big Bang, or at least I think China hopes it's the Big Bang. It was a big sort of press conference was announced relatively quickly. People's Bank of China running it, the securities regulator was there, and another top official was there as well. And let's take a look at what they did. It's the first day they said that the People's Bank of China has cut the reserve requirement and their 7-day rates on the same day, and this is a big deal because they don't typically do that. They also promised that the reserve requirement rate could be cut even more, and that means that banks can use more of the funds they have on hand to lend out. Now, a little side comment here is it's not that the banks don't have enough money to lend out, it's whether or not there's loan demand. So just making sure that it's a signal to the banks that you can release more capital, you can try to do more things with it. Whether there's demand for it is a different story. They also announced some big mortgage changes, and their property sector has been a big drag because it used to be the property sector was 25% of the economy or thereabouts, and you could argue whether or not real estate should be 25% of the economy. But whether you like it or not, a lot of people Chinese people citizens invested in homes and second homes, first homes and second homes, and all of a sudden some of these are underwater. Some of these haven't been delivered as places like, I think Evergrande failed. They couldn't deliver on apartments where they had received down payments, and it was one of those issues where they were taking down payments and paying current bills. So once that flywheel stopped, a lot of people paid money that they basically couldn't get back. So what did they do here with the mortgages? Now, just remember that all mortgages in China are adjustable rate mortgages. So they move up and down with the market. And as rates have risen over the past few years, that's hurt a little bit. And they're also maximum of 30 years. But there's also a little wrinkle to it where the age of the borrower plus the length of the mortgage cannot exceed 65 years. So if you're 45 years old, you can't get a 30-year mortgage. Their thinking is, well, you can't pay it because the sort of mandatory retirement age in China for men is 60. So given this, the People's Bank of China said, we're going to lower mortgage rates by 50 basis points. And that's going to put $21 billion US dollars back in the economy, or 150 billion yuan. It's great, but it's actually not that much. Just to give you an example, I worked out on my HP12C. If you have a $300,000 mortgage and it moved 50 basis points, you would save about $90 a month, which is great for people who are struggling. If you have an extra $90 a month, you're probably going to spend it. You're not going to put it in the bank. So it will help them get to their goals of 5%. Finally, they talked about a stock stabilization fund to help support the stock market, which sounds great in principle, but virtually never works because it's artificial. And once those bullets are spent, stocks will go the way they go. Now, this is, and they've also done things to encourage the buying of second homes. The down payment went from 25 to 15%. That's sort of a lot better in terms of for those who want a second home. Now, this hurts the banks because now all of a sudden they make less money on their mortgages. So they've actually said, we're going to add Tier 1 capital to the banks to help them through the process because we're sort of impoverishing them from one side. We're going to add a little bit more money on the other side. And there's some other details with it, but it's a big package, and the stock markets loved it. Chinese and Hong Kong stock markets were up somewhere between 3 and 4%. I suspect they'll be up more during the course of the week. Their goal was, I think, the short term was to hit the 5% growth target, which they may well hit, or they'll miss it by a little bit. The question remains, though, is this going to be enough to really turn their economy around?
And Tai, I think you did an amazing job of breaking down the details of this package. And as you have highlighted, the economy does face challenges, especially when it comes to housing. So I do agree with you about whether or not this is going to really make a difference in the long run as well. And as you mentioned, we did see reaction in the Asian equity averages. And as we were mentioning yesterday, we were expecting this to happen in terms of an announcement from the PBOC before their holiday next week.
Right. And they didn't disappoint. I mean, they couldn't disappoint given how poorly the markets were faring and how bad consumer confidence was. So I think the monetary authorities threw out what they had there. But at the end of the day, to your question of whether or not this really turns everything around, is if you're worried about your job, if you're worried about the economy, and I say, hey, Remy, I'm going to give you 3.5% instead of a 4% mortgage, to buy a house in, let's pick a city, in Trenton, New Jersey. I just picked a city. You're like, but I don't want to buy a house in Trenton, New Jersey. Sorry, I didn't mean to offend anybody from New Jersey. It was just the town I picked. Trenton is the state capital of New Jersey. People have to want and have the confidence in their careers and in the future to want to buy a house. Because if you think about it in a funny way, when people take on debt, when people borrow money, it's really a sign of confidence in the future. I'm borrowing money because I think I can pay it back. So that's a really important part. They've got to rebuild that confidence, and that's a really tough ask.
And when we look at some of the headlines regarding the Chinese economy, we've talked about this with other guests that we've had on the show as well. But when you hear about youth unemployment, challenges in housing, as well as the struggles of the middle class there in China and growth figures as well, that is really concerning. So you do bring back the point that whether stimulus measures such as these will really make a difference moving forward when it comes to the economy and, of course, growth.
I think this is a great first move. It's a good shot to the markets. I think the markets have probably a little more way to run in terms of the fact that they like this package. But in the end, if this is it, I don't think it's going to be enough.
And we'll have to wait and see how this unfolds this week. But before moving away from central banks, Tai, so you were mentioning on the heels of the latest Fed official speakers, which included Bowman, who was the one dissenter last week when the other officials voted to cut by 50 basis points for the Federal Reserve. But you pointed that we're starting to see Fed fund futures when it comes to a 50 basis point cut at the November meeting creep higher. Is that correct?
Yes. Just late last week, the markets were pricing, the futures were pricing 25 basis points in November and 50 basis points in December. They're still pricing a total of 75 basis points, but now it's more centered by about a 55 to 45% edge, more 50 basis points in November than December. Now this is liable to change, but just the shifting of the thinking, as I guess the combined commentary from Kashkari and Bowman and Goolsbee is getting the market more comfortable that this Fed wants to cut. They think they have room to cut, and they want to get it in sort of earlier rather than later. So I think that's why the thinking is shifting a little bit. But we have a lot of data coming up. PCE on Friday will be the first one. If that comes in hot, I think that will probably switch back. They'll still think of a cut, but it'll be maybe 25 in November, 50 in December.
And it's hard to believe, but we are entering the final week of September, so that means the September jobs report is also coming around the corner, and that will be very closely watched.
Yeah, very important. Probably even more important than the PCE, because the Fed's saying, or has said recently, we're pretty confident in inflation, but we don't want the job market to deteriorate anymore. And as Professor said in the show yesterday, if you're getting 100,000 new entrants into the workforce every month, you need more than 100,000 new jobs to soak up those extra workers. Otherwise, your unemployment rate will start to grow up. Now, in some ways, this is a really good problem to have, that we have more people entering the workforce. A lot of developed countries have shrinking workforces, or looking at steeply shrinking workforces, particularly in East Asia. In China, in Japan, in Korea, it's become a big issue. So it's actually kind of a luxury.
And while we're on the topic of what's moving markets this morning, we've covered the PBOC and we've touched on the Fed, but we're also seeing commodities getting a boost this morning, aren't we, on the heels of the PBOC announcement? So I think, we've talked about gold and the record highs that gold has hit, but we're also seeing a move higher in crude today, as well as some of the base metals.
Yes. So crude has had a pretty good run. I think it dipped a little bit when the new president of Iran, said that he wants to ease tensions with Israel, which is a little bit of a surprise, which is typically not so good for crude. But the big stimulus package in China really boosted all commodities, including crude. Brent's higher this morning. WTI is higher this morning. Will it really last? Not until I think we see a real demand surge. I mean, this is the market trying to price in. Well, it's a great move by the People's Bank of China. That means there's going to be more growth, and therefore there will be more need for energy and commodities. But markets do this; it happens all the time. But I would say that base metals, which I've traded for a long time, copper is at 2 months highs, up $225 a ton on the London Metal Exchange, and it's leading the entire network of base metals higher. And base metals in China uses probably around 50% of all the base metals that are produced every year. So whether they have great demand will directly lead to how these metals do. When China was looking a little bit better at the beginning of the year and there were a lot of supply issues, copper went over $10,000. And then it relatively rapidly fell back to 9,000, and now we're at 9,800 because of China. I think it's probably, it may extend a little further, but I don't know if there's enough yet to put base metals into a sharp uptrend higher.
And so, Tai, you've been in base metals for a long time, so you understand what moved that sector of the market. But why is copper seen as an indicator of economic growth or a fall in demand?
So copper is a sort of a great conductor. I mean, the precious metals are better conductors, but they're a lot more expensive. Right? In the U.S., it's traded in cents per pound, and it's $4.50 a pound. Whereas silver is a great conductor, but that's $30 an ounce. And gold's an even better conductor, but that's $2,630 and rising. So copper is really the metal that you need for you need for electric cars. You need to put in wiring, sometimes piping if you have a really nice house. So copper is used in so many industries for critical things, and it's hard to get a conductor like copper anywhere near that price. So that's why copper is so important. And concerns about it are the existing copper mines are producing, but we don't have a lot of new copper mines down the pipe. Nothing, and to start a mine, to get it from sort of soup to nuts where it's producing, that's a 10-year issue, and there's not a lot of things in the pipeline. So the view is, if growth continues the way that we think it's going to continue in EVs or in other things, then we're going to run out of copper. But there are a couple of things to be careful there. Is if growth continues like we assume, and we can always kind of get more supply as copper gets more expensive, people recycle more. So it'll be an interesting market, but it's always a good market to see where China impacts that market in a big way.
And I do want to take a very quick look at the markets right now, because earlier this morning we got the release of the Consumer Confidence Index from the Conference Board, and that declined in the latest month. It came in at 98.7, and that was much below the 105.8 seen in the previous month and lower than expected. So initially after that release at 10 a.m. Eastern Time, we saw the major stock averages fall below flat, but the Dow Jones Industrial Average is still holding on to session gains and is higher by nearly 0.3% or over 100 points. And this does come on the heels of yesterday's record close, Tai. So it'll be exciting to see where the Dow actually ends up at the close of today's session. Meanwhile, the Nasdaq Composite Index is flat in mid-morning trade here at the New York Stock Exchange, while the S&P 500 is also flat, just barely above the flat line this morning. So we'll keep an eye on what happens as we head into the rest of the session. So what's that I noticed this morning coming in is, despite the rally in Asian equities, the move in commodities, as we touched upon the base metals, crude oil, as well as gold, is that crypto hasn't really moved that much compared to where it was yesterday. So what do you make of some of the moves that we've been seeing in the crypto majors?
So crypto has had a nice bounce behind the risk assets bounce and behind the Fed's cut last week. I think it's looking for another signal, whether it's a weak employment report, in a week and a half's time, or a low PCE to get a little more confidence. It bounced from relative lows. It's had a nice run. I remain concerned that Bitcoin's trying to break out of a downtrend, and it's just nosed above it. So I think right now the price action is going to be a little sideways. People who bought at 70,000 in Bitcoin saw it drop below 60,000. At 63, 64,000, they may be thinking, well, maybe we need to pare back our exposure a little bit, or certainly we don't want to be buying more here until we get perhaps another signal. I think it just needs another little boost of energy, and we're waiting to see what that is. Yeah,
it's very interesting because there were expectations possibly that it would move based on what we heard from the PBOC, but we did talk about the relationship of Bitcoin and fundamentals in the previous session. So it's interesting to keep an eye on those relationships.
Yes, definitely.
And of course, while we're watching markets this morning, we're seeing Boeing shares lead some of the Dow laggards this morning. Boeing is off by 1%, and we are watching the headlines and what will transpire regarding their latest offer. So what do you think is going to happen here, Tai?
So there's an interesting interplay here. So Boeing comes out and says, this is our best and final offer. Which is sort of interesting. It's an interesting negotiating point. And I mean, it's a pretty good offer. Instead of 25% raise over 4 years, they went to 30%. So that means, on average, well, this is according to Boeing, but I'm going to assume that their data is correct, that the average annual pay for a machinist will move from 76,000 today to 111,000 at the end of the 4 years. Now that's pretty good. Once again, I'd like to have that too. Just saying.
That's quite an increase.
That's quite an increase. They are also restoring the annual bonuses that they had lost, which was a big point of contention. They are doubling the signing bonus from 3,000 to 6,000, and for people who middle class sort of families, if you get an extra $6,000 ahead of the holidays, that's pretty good. So I think that's certainly a little carrot there. And then they're going to increase their contributions to their 401k as well. So what's interesting is the union, which had agreed to the 25% pay increase earlier, said, no, you didn't consult us first. So we don't like this. And the other deadline that Boeing said is this deal is, I guess, an exploding deal, which says you have to vote to ratify by this Friday. And the union feels a little usurped, although it is clearly a much better deal than a significantly better deal, I should say, than what they had before. So will they ratify it by Friday? Probably not. There's probably a little room there because Boeing doesn't want this to drag on any longer. It remains to be seen whether this is enough. And one thing is that if you say it's your best and final offer, well, it better be your best and final offer, because if it isn't, then you'll say, well, it's always your best and final offer. We'll just hold out for a little longer. Let's see if we can do that. So I think the market is uncertain about this ploy, which is why Boeing shares are down this morning.
And you and I have talked about Boeing in the past few trading sessions. We've seen the price action for that stock go up as well as down. And when we think about it, with each passing day without an agreement, we know that Boeing is losing tens of millions of dollars. So that is concerning. And of course, earlier this morning, you and I were talking, apparently Ryanair was saying that Boeing expects disruptions 2 to 3 weeks beyond the end of a strike, and we still don't have any timeline or expectation of when that strike might end.
That's right. It takes, everybody puts down their tools. You probably takes a little while to get everything going again. And I think they have a singular focus on making sure everything is working well and on quality, given their, the recent troubles over the past few years, which is really, kneecap what was once, if it ain't Boeing, I ain't going, a motto that they used to be so proud of. And I think that they're going to tuck that one away for another decade or so before they get their quality back up to speed. So it's going to take some time. The estimates are as much as $100 million a day. So that hurts, and that hurts in terms of your potential ratings downgrade. That 2 or 3 weeks were what some of the ratings agencies said before they might have to downgrade Boeing, and they're only one step above junk status. So it's right now they want to get everything going, but it's the sooner they get it over, the better. So it'll be interesting to see if this ploy works.
And I'm sure heading into the rest of this week, we'll continue to monitor headlines on Boeing and if there's any progress made regarding the strike. So before we move on, I do want to talk about what's happening here in the city. So the UN General Assembly taking place, a lot of gridlock, a lot of traffic around Midtown Manhattan, especially around the UN, given that heads of state are here. So we're keeping an eye on what's happening in the Middle East. And of course, Biden is expected to speak at the UN as well, at the General Assembly. But apparently, Iran's president wants to ease tensions with Israel. So it'll be interesting to hear him speak as well today. But what do you expect?
So I don't think expectations can be too high, because the political apparatus in Tehran is really the real center of power, are the Ayatollahs. And the president of Iran, you'd say, oh, he's a reformist or he's a hardliner. I remember a few years ago when Ahmadinejad came and he was a hardliner and he had, some infamous comments. But the range in sort of the political apparatus in Iran, it's about this wide, right? So, a reformer might be here and the hardliner might be there. But it's an interesting signal that you shouldn't ignore, because if Iran decides, for whatever reason, they want to take the heat off, maybe they think they can get some sanctions relief, and that they can probably, I don't think they control Hezbollah on a day-to-day basis, but they're, Hezbollah's financier. They are, the main supporters of Hezbollah and Hamas. If they tell Hezbollah, all right, you've taken a hit, you've hit back, you can walk away with honor. Let's dial the temperature down so you only shoot 10 missiles a day or whatever it is. There'll be impact to those statements. So definitely listen to what he's got to say, what Netanyahu's got to say. Actually, I'm interested to see how the UN responds to him, and then also what President Biden has to say. But it'll be an interesting week in New York for sure.
Yeah, absolutely. I'm sure we will be talking about what comes out from the today's session at the UN. But as you mentioned, there are so many moving parts here, and the U.S. sent more troops yesterday to the Middle East. So this is concerning from a geopolitical as well as a political standpoint, isn't it? Right,
and I think they moved the carrier Harry Truman closer to the Eastern Mediterranean, just to make sure that if something gets out of hand, we have eyes in ears and are able to project our power, as quickly as possible, just in case. And it's really a signal. We don't like to put troops in anywhere, particularly, and we're not going to, in Lebanon, since we had a little problem in Lebanon back in 1982. So a lot of things to watch this week.
A lot to watch from the geopolitical front as well as political front. And as we approach the vice presidential debate coming up the beginning of October, I'm sure this is something both candidates will be addressing.
The last sprint to the finish in this unbelievably close election.
Okay, Tai, well, as always, thank you so much for joining me here on the floor of the New York Stock Exchange. to go over the headlines affecting the marketplace.
Always good to be here.
Thank you, Tai. And coming up next, we will be joined by Larry Ryman, REIT expert at LDR Capital. We'll be right back. Don't go away.